Is gold a safe haven option? By www.options-trading-education.com. In times of political, social, and economic upheaval, gold is a traditional safe haven. How can an options trader take advantage of the swings in gold price during such times? Think of gold as a safe haven option and consider trading options on gold ETFs. MoneyBeat talks about gold ETF options as hedges against risk in turbulent economic times. Investors seeking to protect their portfolios against recent swings in currencies and government bonds are snapping up options on a gold exchange-traded fund. The activity started back during the rout in government bonds, which sent German 10-year yields surging from record lows and has continued as currencies continue to swing. Options on the SPDR Gold Trust GLD, minus 0.08%, traded under the ticker GLD, were among the most heavily traded Tuesday, with bullish call options dominating activity. The euro is down 1.6% against the dollar Tuesday to $1.113. The beauty of trading options on gold ETFs is that one does not need to buy or sell gold bullion, but rather shares of funds that track the price of bullion. One can buy puts on these shares when betting on a downturn in gold price, as well as calls when an upswing is likely. The safe haven. The Middle East is on fire, and a tentative truce is all that keeps Ukraine out of civil war. China is seeing its stock market rise despite an economic downturn. Europe is flirting with a breakup, starting with Greek debt default and German bonds. The paradigm of safety are volatile. Gold at such times is a safe haven, as investors fear a breakdown of society and the monetary system. The gold safe haven option is to trade ETFs to profit from the resulting price swings. Considering that the Chinese are big gold buyers, it is instructive to look at markets there. Bloomberg writes that Hong Kong is no longer a safe haven. Everyone's long known that China's stock market is a rigged, non-transparent mess. That's a problem for Beijing, certainly, but it's also now a problem for Hong Kong, once considered the gold standard for global financial hubs. China is exporting its financial bedlam to a city whose defenses may be woefully unprepared. Charles Lee, the CEO at Hong Kong Exchange and Clearing, recently told Bloomberg News his market can easily handle the mainland inflows enabled by a new exchange link with Shanghai. What isn't clear is whether Hong Kong regulators have the capacity to monitor and contain the risks associated with all that cash sloshing across the border. This week's events only reinforce those doubts. On Wednesday, solar company Henergy Thin Film Power Group crashed, erasing a breathtaking $19 billion in 24 minutes. A day later, the chaos spread to the Golden twins, Golden Financial and Golden Properties, which lost $21 billion, about half their market value, for no obvious reason. The three companies had been among Hong Kong's best performing stocks this year. China's bubbles are now Hong Kong's problems. Gold is a safe haven option when things get dicey at home and overseas. Buying calls or puts on gold ETFs limits your risk to the price of the options contract, and buying puts allows you to leverage your trading capital and profit from a downside move of gold when things become more stable. Profit when things go from bad to worse. ETF Trends also reports on the gold ETF safe haven option strategy. Tuesday, as in recent sessions, the GLD call buying has been driven by the idea that gold as a safe haven asset could benefit amid the turmoil in currency and bond markets, says Rebecca Cheong, head of America's equity derivatives strategy at UBS Securities. And since gold prices haven't swung to the same degree as currencies and government bonds, that means GLD options are cheaper for investors looking to hedge, she added, reports Saumaya Vaishampayan for the Wall Street Journal. This may or may not be a good strategy, but as always with buying options, risk is limited and one can nicely leverage trading capital toward profits. For more insights into trading stock, futures, or Forex options, visit www.options-trading-education.com.